Hi, this is Sylvia, and in this video I'll try to explain how to account for the items of property, plant and equipment when your company applies certain CAPEX or capital expenditure threshold and what to do when this threshold changes. Today's question is very frequent and it's really hard to say whom it is coming from because many people ask about the same issue. We have a CAPEX threshold policy where we capitalize all assets with costs higher than the threshold. Let's say that the threshold is 1,000 currency units. What if we buy lots of assets at 700 each? It does not seem okay to pass them in profit or loss because their total value is more than 1,000. And also, how to set the threshold? Any advice? What happens if a company revises its capitalization threshold from 1,000 to 1,500? Will this be accounted for as a change in accounting policy, and will this be applied retrospectively? So these are all great questions, folks. And it has all something to do with materiality and aggregation. So you need to set up your materiality level first. But what is to be material? The standard IS1 specifies that material is anything that could either individually or collectively influence the economic decisions that users make on the basis of the financial statements. So it's certain significance or importance of these items. And item can be important due to two basic factors. Factor number one, it is size. So yes, the purchase of the whole admin building will be probably material for a medium-sized company, but not the purchase of waste paper bin, right? And number two, sensitivity. Some items can be material not due to their size, but due to their sensitivity, because they can have an impact on how other people perceive the company. And typical example are bonuses to management. So they might not be significant, while $1 or $2 million paid to CEO of some big multi-billion or gazillion corporation is probably not material due to the size. But people always watch out on how the companies remunerate their managers and whether the shareholders are not in conflict with management. But in this podcast episode, we will focus on the size. So, materiality is something that must be assessed by each company individually. The reason is that it depends on the company's size, nature of operations, magnitude of individual information, and its significance for financial statements, etc. And let me say that yes, materiality is very judgmental and each entity must determine it. So there is no exact and explicit process or calculation of setting the materiality. But in September 2017, IFRS Foundation issued the IFRS Practice Statement number 2, titled Making Materiality Judgments. And this is a paper or a document that describes the process of setting your materiality levels. It has 4 steps like identify, assess, organize, and review. And you can actually download the full practice statement for free at ifrs.org. Okay, so you set up your materiality. The CAPEX threshold is not a materiality, but it is very closely related to it and it's derived from it. So what is it? The CAPEX threshold should be set in a way that the total amount of items expensed in profit or loss is not material, right? So if the aggregate amount of small items not capitalized due to being lower than the threshold is lower than the materiality, then your threshold is set correctly. Let's say that you set the threshold of 1,000 currency units. So everything over 1,000 gets capitalized as it is significant, and everything below 1,000 is expensed in profit or loss. Fair enough. Now, what about the situation when you buy 5 assets, while 700 currency units each? Well, so it means that you made a purchase of 3,500 currency units. So individually, it is not material because it's below your materiality level or CAPEX threshold. But in aggregate, it is material. And the standard IS16 describes that in paragraph number 9. It says that it may be appropriate to aggregate individually insignificant items such as tools or molds and apply the recognition criteria to the aggregate value. So if the aggregate value is lower than your threshold, then expense it in profit or loss. Okay? Now, what happens when you actually change the threshold from 1,000 to 1,500? How should you apply that change? Well, if you have set the thresholds, you should revise them each reporting period, that is at least once per year, at least. And you should really look at whether the current amount is still immaterial and not affecting your users. So if you conclude that, okay, the company grew bigger and as a result, even greater amounts became immaterial, then increase your threshold for the new items. Should you reflect the change in materiality or the change in CAPEX threshold, in this case, retrospectively? Yes, sometimes. And it depends on whether your CAPEX threshold increases or decreases. And let me explain what happens if your CAPEX threshold decreases first. Imagine that some asset meets the recognition criteria for property, plant, and equipment under IAS 16, and it meets the definition of PPE, but you do not recognize it as an asset because its cost is lower than your threshold. What actually happened? You made an immaterial error, isn't it? So let's say that your CAPEX threshold is 1,000 and you bought a bookshelf for 800. And bookshelf is property, plant, and equipment because you plan to use it to store your office files for more than 1 year. So you should capitalize it and depreciate it as an asset over its useful life if you want to be 100% correct. But it is not material, so you can expense it. So you just made an immaterial error in fact. And the next year, your company shrinks for some reason. Profitability goes down and smaller items become material. So you revise your CAPEX threshold from 1,000 to 700. And what was immaterial error last year becomes material error this year. So you should make a correction of this material error under IAS 8, that is retrospectively. And the IFRS practice statement that I mentioned also asks for this in the paragraph 80. Of course, this happens only when you decrease your CAPEX threshold and immaterial items become material. When you actually increase the CAPEX threshold, the material items become immaterial, and thus there's no cumulative material error from previous periods. So no, if you revise the threshold upwards, there's no need to correct. That's it for today. This is our disclaimer. Please read it. I have to add it here. Please share this video with your friends. If you believe it can help them, spread the love and feel free to visit CPDbox.com. Sign up to our free newsletter, check out our courses, articles, and many responded accounting questions. Bye, and thanks for watching.